Welcome back. Well, in our study of the economy, we look at various different gauges, such as CPI, that measures inflation, non-farm payrolls, that measures the employment. We look at the very beginning of a business. That's started with a business application, where the business will request an EIN, an employer identification number. We can measure this data to get an accurate gauge as far as the strength or weakness of different sectors within the economy. So, for example, what we're going to see is the transportation sector, partially due to high fuel prices and also high interest rates, is really performing in not a good way. The black line in the background, that's the S&P 500 to give us a little bit of context. This goes back to 2021. And what we see here, this number, which is just a little bit over 31,000, that represents 31,000 employer identification number or tax ID numbers for businesses that were requested. And this data is harvested on a monthly basis. Now, on a month-over-month basis, the biggest change, we should say, are utilities down 26%, mining up 28%. That's not very telling, though. I think it's more accurate to, consider this data on a year-over-year basis, comparing this time this year to this time last year. Retail trade up 41%, the greatest increase in business applications we've seen in quite a long time. The weakest sector is utilities. Also, one of the weakest sectors, transportation. And both of those sectors, utilities and transportation, are very sensitive to interest rates. Also, transportation, very sensitive to higher fuel prices as well. Also, notice a strong part here is a healthcare. Healthcare, we see from one of our recent videos, we looked at the Indeed job postings. Healthcare is the number one sector for job creation lately. This is the average business applications across all the different sectors in blue. That's the S&P 500 in black. Pretty strong correlation. When stocks move up, people get more optimistic. They want to open new businesses. They file more business applications. Conversely, when the market goes, falls into pressure, and again, this is on a year-over-year basis, as stocks go down, so do business applications. That's logical. Well, let's take a look from strongest to weakest in terms of just the overall pace of growth. Retail trade, by far number one. We see the latest number, about 100,000 new applications were requested for EINs within the retail trade sector. This is the highest high, even higher than we saw in 2021. Really a bright spot. Also, what's very strong? Healthcare. That's around 19,500. Now, I know that the numbers are different. Certainly, there's a lot more individuals working in retail, trade, and healthcare, but that's why we measure this, on a year-over-year basis, looking for the greatest change. Now, this is not a year-over-year basis, but regardless, we can see the growth comparing to where we were over the past couple years. This is one of the best numbers we've seen in a while, healthcare. Following behind that's construction, but you see really the big gap between construction and healthcare. Construction is less than 50% from where it was just a few months ago. Construction, maybe in part due to the rise in interest rates, really has not been doing well. Not a lot of new interest in construction related industries. Mining also not nearly near the high that it was just a couple months ago, about 50% up. Accommodation and food services, no big surprise. The sector was very hardly hit during the COVID crisis and continues to not fare well at all. Certainly, it did recover quite nicely in 2021, but that was comparing to where the sector was in the middle of the COVID crisis, which was really zero. So it did recover, but since then, it has not been able to find any kind of strong ground. Utilities, which were very strong not too long ago, now just barely manages to gain any kind of strength. Now, on a year-over-year basis, it does show some sort of improvement, but really not where we want to be. Not it's not a strong sector at all. It's very sensitive to higher interest rates as well. Transportation and warehousing, specifically in the transportation sector, it's one of the weakest sectors we see by far. Higher interest rates, higher fuel prices, the cost for, used cars and auto parts, all of that together, it just shows that this is one of the weakest sectors. And the reason why we take a look at these different sectors is again, so when we look back at our own investment portfolios, we can try to align our capital towards what seems to be working within the economy. Or conversely, if we're looking for a value play, if we want to buy something that, maybe it's gone down a lot and we're hoping for recovery, then we would look to the weak sectors. Now, here are the different sectors with a black line representing the S&P 500. This is measured on a year-over-year basis, and we can see over time. Specifically, take a look at the red line, utility sector. In March of 2023 was doing quite well, 80% year over year. That has declined, and now we're about a negative 20%. Take a look at the yellow histogram bars. That's healthcare, one of the few bright spots in the last report. Also, the gray histogram bar, that's transportation. That really has not been able to find any kind of solid footing all the way through. So again, there really seems to be a big divergence between the strong and weak sectors as it relates to business applications. And the two real outliers to this are retail trade in blue and transportation in red. And if you think about the retail trade sector, certainly, it is sensitive to some extent to interest rates in terms of credit cards and that sort of thing. But they're lower priced items, and maybe there's a little bit more flexibility for the consumer, a little bit more flexibility for the small business as well. Conversely, transportation, these items tend to be larger, ticket purchases and, with a lesser frequency. We don't buy new cars very, very often. And especially with higher fuel prices again and higher interest rates, it's just not a sector that's doing very well at the moment. So it's a pretty interesting insight, and it does agree with some of the previous recent reports that we've talked about how weak the transportation sector is and really how interest rates seem to have hurt this group of stocks and companies quite severely. We hope this has been helpful. We look forward to seeing you back soon.